So we have Emily Rassam. She is an Investopedia Top 100 advisor. She's also a senior financial partner at Archer Investment Management. If you don't know, Emily was unquestionably like one of the breakout stars from our 2024 tax planning summit. We had her on a panel and people were just peppering her with questions and she gave the insights. And so we brought her back this year to do a whole series. Every month we have a dedicated Emily Rassam webinar. And so, Emily, welcome. We're happy to see you. We love having you up here. So I'll hand it over to you.
Yeah, I am so excited to be here, especially because following up on Ed Slott's talk, the aspect of identify those clients that Roth conversions could be meaningful for, explaining how it works. But I'm going to get into that last part, which is show. So everybody who saw Roger's quick kind of flash of that screen of what that Roth projection tool looked like, I saw the Q&A, people saying, how do I get here? How do I get to this screen? I got more questions about this. So I'm going to take you there. This is a live workshop. I'm going to have each of you pull up Holistiplan so that you can get in here and follow along with me. So we're going to be sharing the details of this case that I'm going to be having you plug in along with me. So you can enter those details as I'm entering the details on my screen. You can follow along. And so then you'll be able to kind of click where I'm clicking and go where I'm going. So I want to make sure that you can all get there. I'm going to share my screen here and just show you where we're going. So existing users, I'm going to have you just pull up Holistiplan. Make sure you have the Premier membership. So you can check your membership level under settings and under subscription. So you want to make sure that that's on so that you can go ahead and see that Roth conversion tool that we're going to dive into today. And also for new users, this is a perfect time to use that 7-day demo option. So being able to get in there and then utilize that coupon code. This is like the only time of year they have this 20% off. It is time to do it. And then a couple tips here as we get into it. For initial setup, you can skip adding the multi-factor authentication for now, especially since we're just putting a demo client in there. You can add that later. And also, they're going to be sharing some partner page links in the comments for any type of advisor that has a specific landing page that they need to get to sign up for Holistiplan. Those links are going to be saved for you. So for those of you who are signing up for the very first time, you're going to go right over to Holistiplan's website. And in the top right corner, you're going to see a black button that says Start Free Trial. So if you've not done this yet, you're going to start a free trial for 7 days. You go ahead and enter all of your information here. And then for plan selection, you'll want to do the premium version here. So get into the premium version. You just select the number of households that you work with. You can upgrade this later as well. So you can get in here, plug in the premium version. Under payment details, this is where you enter that coupon code. So that Summit 2025 is going to go in here. So just very basic information is needed to get going. Enter, select that premium plan. Go ahead and enter your payment details to get going and that coupon code. So if you decide to keep Holistiplan, which I think you will, that'll kick in that 20% discount on the plan that you have chosen. So go ahead and get that free trial started. I'm going to give you guys a few minutes to get through this area. And then for any of you who are existing Holistiplan subscribers, you're going to want to just go in and make sure you have that premium version. So you'll go in under settings here and you'll be able to look at your own subscription under this heading as well, and just check out and make sure that you have that premium. So this is something where I feel that we've talked about Roth conversions. Everybody on this call knows what they are and how important they are. And Ed really drilled that in. I love how he shared how important it is to be talking about Roth conversions. But what we're going to get into today is a way to really show that impact to clients. People don't think beyond the current tax year. And they really, even clients who are thinking longer range, like thinking about what their tax brackets could even be, their perception is that my tax bracket's going to be lower in retirement. So they might be thinking, okay, I'm 41 right now. When I'm 61 and I'm retired, my tax bracket's going to be lower that year. but I'm going to blow your minds if you've not seen or you've never shown your clients what those tax brackets look like over their lifetime and where that income comes in on the bracket. We're going to get into all of that today and be able to show that to clients. So if you can immediately show them, here are those big, scary future income years, and they're scary with current tax bracket assumptions. As Ed mentioned, we've seen really high tax rates in previous decades, so that could even be higher. So this is just making some assumptions about what the tax brackets are going to look like, and that could be higher. So we're going to show some scary numbers, and we're going to immediately quantify our value in helping show how to do these Roth conversions. So giving you guys all a few minutes here. If you took a break and you're just coming back, anybody who is brand new to Holistiplan, we're going to have you go in and start your free trial. Anybody who is existing Holistiplan subscriber, go ahead and log in and get to your login page, and we're going to get started here. So I'm going to give you just another minute to do that. So I'm an advisor. I don't work for Holistiplan. I'm not a product person. I'm not a software person. I'm not a marketing person for software. I'm an advisor who works with clients every single day. I, just before this summit, got off of a call with a client talking about doing Roth conversions this year and being able to quantify for them if they were going to have a little bit of that pain now, so a little bit higher tax bracket or tax bill this year, what does that mean for them in the future? How do we quantify that potential tax savings? So getting in and doing that I feel is the real work. This pays for our costs, whether you are flat fee, fee-based, AUM, commission-based, whatever you charge. Saving people truckloads of money on taxes pays for ourselves and then some. All the other planning we do is free, right? So this is so important. And I'm really excited that Holistiplan now has this tool and these features that are allowing us to really demonstrate that value and show clients what that meaning is over a long period of time. Because it's a confusing topic. If you send them an Ed Slott article or the book or any Kids' article, it's hard to kind of digest what that means. But being able to take your client's data and put it into a tool and then demonstrate it for them for their specific case and scenario is incredibly powerful. So excited about it. Okay. I hope you are all kind of catching up to getting logged in to your main page here. So I'm going to kind of start to walk into setting up a household. We're all going to set up the same household together. But what I'll also tell you is, especially if you're on a trial, or if this is now top of mind for you, you heard Ed's message and you're saying, man, I got to be identifying these clients, these top clients with $1 million or more in their IRAs. I need to get working on this right now. Get in here, just start doing it. So just get in here and go in with a client. So especially the first few times you're going to go into any new tool or software, don't be afraid to do it with the client and say, hey, this is a new tool, and I thought of you immediately. I thought you would really benefit from this and find this exciting, and come on this journey with me. Let's plug in the information together. I do like to do these live with clients so I can say, these are the data points that I'm plugging in, because you're going to see we're going to save a ridiculous amount of money in taxes for this one fictitious client that we're plugging in. So you don't want them to say, oh, that doesn't seem right. That can't be right. That can't be real. So being able to take them in and say, you're watching me input this info, right? That's your date of birth. This is your income. These are your asset levels. So being able to go in there with your clients. So that's my charge to you, is do it for yourself on your own data. And do a Roth conversion for yourself this year too. If you've never done one before, even if it's a small amount, do just a conversion for yourself. See how it feels. See how it shows up on your tax return. Go through what we do with our clients. And just do it. Do a few sessions of this with your clients and just see how impactful that's going to be. Okay. I hope that you are all with me here. So if once everybody's logged in, whether you came in through the path of starting a free trial, or if you are an existing subscriber, you should be able to go into your household. So you can navigate there through the top bar here, or right over here, there's a button on the right that says households. You're going to bring us over to the household list. If you are brand new, there is going to be nobody here yet. We're going to build somebody together. If you have your other existing clients, we're going to ignore them for now. But we're going to go in here and we're going to add a household. So you'll see a button right up here where we can add a household. Most of the way that I put new clients in is I usually have a tax return to start. So I usually start by uploading a return, but you can just add a household. You actually don't have to have a tax return from your client to use this specific tool. So you can add any client, even a prospective client, in as a household into this tool and be able to run a Roth projection calculator for them without a tax return. So those stubborn clients that don't send you their returns or won't go through that process of getting the transcript, you can still get in here and utilize this tool for that particular household. So go ahead and add your household. And I'm going to use the same facts here that I'd love for you all to use as well so that we have the same page. Everything related to the household up here, up top, this is all optional stuff. So we're going to just go ahead and leave that blank right now. But if your team has multiple advisors or multiple teams, you can go ahead and just select if you'd like to tag that to you or tag that to someone on your team. But what we're going to do right now is we're going to add our client. So our client, we're going to add Andy, first name, and then last name Abbott, Abbott. Okay. And all I need is Andy's date of birth. So we're giving him a date of birth of 4/15/1985. Okay. So that's our initial person in our household. And then we've got a little button down here for add a client. So if this person has a spouse, we can go ahead and add a client here. So we've got first person here is Andy, Abbott, and then date of birth 4/15/85. Then we're going to go ahead and add that spouse. So we've decided that this is Aspen, Abbott, and Aspen was also born on tax day. How funny is that? 4/15/1987, which I also found out was the anniversary of when Holistiplan was founded. Just neat. So we've got our people here. So we're just building this household out for this. We're going to go ahead and create household. Okay, so once we do that. Okay, so then we find our household in here. Okay, so this is my new household here, Abbott, Andy, and Aspen. We go ahead and click on that name. So if you're new, you'll just have that one. It takes just a second to pop up. So we've got our household here. So really all of the other tools that Holistiplan offers can typically be found here. So tax return reports, scenario analysis, tax letters, we cover these in all different webinars. We're going to go right down to Roth projections. So you all should see kind of the fourth category down here is Roth projection. So this is the tool that we're going to go into together today. And I'm going to give you all the details that we're going to plug in together along the way. So click on for the Roth projection tool, we want to create a Roth projection. So go ahead and click on this gray button right here next to Roth projection. Okay. And we just want to give it a name. We'll just call it Abbott Family Roth projection. Okay. So we know that they're married. So you can select the filing status here. So you can go ahead and married filing jointly. And then you need to select each of the two people in the household. So taxpayer 1, we're going to say that that's Andy. So we pick Andy out here, and then we can go ahead and add Aspen. So pretty simple. So this wizard is really just going to walk you through adding this household. And again, we're going to do that together with all of the same details. So we started a new Roth projection, and now we're saying that we want to add their filing status here and add each of them in here. So now we're going to create Roth projection. It's going to then pop up down here. So you can have different versions of this projection. You can create new ones and have different scenarios and name them. So you can say here, this is the version where you stay in your current jobs. And then there's another version where you take the big job or step down from the big job. So you can basically create different versions of your Roth projection and then work with that set of data that you've created. So we have just one set of data today, and what we're going to do is click on this green link right here, which is View Projection, and it's going to take us into the tool. So for everybody who asked, how do I get here? It's really, you add that household, you go down to that Roth projection area, you start a new one, and it brings you here. So don't X out of this little wizard. This is actually very useful. It allows you to just input some pieces of information and some preferences that you'd like to have about how you're going to run this projection. So I'm going to take you through this wizard here. So we're going to start. So I do one thing just a little bit differently because, again, I'm an advisor. I practice, and how I prefer to use this tool might be slightly different than other people do, but I actually don't plug in the Roth conversions yet. So you have the ability to go in here and say, I want to plug in how much I want to convert every single year. You can plug that in, but I actually kind of think of that as if you're cooking and you want to add your spices and your seasoning and your salt at the end, I kind of like to kind of see what we've got so far cooking in the scenario and then add those in. So I want to pepper those in along the way. So I personally choose to skip this. One reason why you might decide to plug in your Roth conversions in this wizard right here now would be if you already know their tax budget and preferences. So if you've already talked to the client about this and they said, this sounds great, but I really don't want to convert more than $20, $30, $50,000 a year, whatever it is that creates that tax budget. Or as a lot of people asked in the chat during Ed Slott's session, what if they don't have taxable accounts or money in the bank or assets that they're able to utilize to pay the taxes? So you might just say, hey, it is what it is. They want to convert $20,000 a year for the next 10 years. We want to just see what that looks like. You might go ahead and plug that in now. But what I want to do is I want to take you where my eyes go. So I want to look at the data set and then I want to figure out kind of how much do I need to do at different points. So I'm going to skip over this for right now. Okay. So we just want to add in some information about their household assets. So for the starting year of the projection. So you just want to go ahead and plug in those assets. So with these assets, I'm going to use for taxable accounts that they have $100,000. So they have, and this is combined. So all of their bank accounts, brokerage accounts, everything that they have from a taxable perspective. And then the cost basis of all taxable assets, I'm going to use 75,000 here. Okay. So they have $100,000 in taxable accounts, 75,000 of it is basis, 25,000 of it is gains. So then we're looking at, so this is for household level, taxable assets, cost basis across the household. And then what we're looking at is now we want to separate out by individual how much they have in tax deferred assets. So this is the total that they have in IRAs, 401ks, 403bs, simples, SEPs, everything like that, right? So everything that is tax deferred, pre-tax money, we want to go ahead and plug that in. So for Andy, he has 400,000 and Aspen's not too far behind. She's got 300,000. Okay. So we have so far taxable assets, 100 grand with basis of 75,000. Andy's got 400,000 across his different combined pre-tax accounts. Aspen has 300,000. And then for Roth assets, this is a combined number. So we're back to combined household number. So we're going to say that they already have in their Roths across the board, they have $100,000 sitting here. Okay. So now we're going to click next. So once we've plugged in really what their household assets look like, we're going to go ahead and click next. And there's a few other pieces of information we want to plug in. So I like to use life expectancy of 95. So I'm going to just go ahead and change that. Okay, so life expectancy, age 95 in this scenario. And then we get to plug in Social Security start year. So this is something where sometimes if I'm looking at somebody who really wants to be aggressive with Roth conversions and they might have this big valley where their tax bracket might go lower for that kind of time period between retirement and maybe starting Social Security or RMDs, I usually like to kind of start out by plugging in age 70. This gives us a little bit more room to maybe do some conversions during that earlier time. So I plug in 70. If they strongly prefer, you know me, if you've been to my webinars, you know that I like to have lots of conversations about preferences with my clients. You know that sometimes clients just want to start their Social Security. I want to retire at 62 and I just want to start it. Paid into this my whole life and it's really important for me to start it right now. I'm worried about it going away. So sometimes clients will really feel really strongly about that. So if that's your case with that person, you want to plug in that age. I typically plug in age 70 just to kind of get started and you can play and tweak with this, right? So we can kind of adjust the seasoning here. So Social Security expected amount. So roughly how much might they expect to receive from Social Security? We'll just say $40,000. Okay. So this is about Andy. This is our first guy here. Oh, I realized input type. So I had on year and I plugged in 70. I need to change it to age. So for input type right here, you can plug in the year if you know it, but my brain doesn't want to do that math. Okay, he's 40, what age is he 70? What year is that? If you want to do it that way, you can, but I just plug in age 70. I like to do input type being the age at the end of the year. So Social Security expected amount being $40,000. That's the income that they expect to receive, that he expects to receive from Social Security. So we've got to do the same thing with Aspen. So same thing, just for the sake of this experiment, I'm going to go ahead and put in same life expectancy as Andy, Social Security start age. So we've got it on age for input type this time, age 70, and I'm just going to say the same amount. Okay. So we've got both of them entered in, life expectancy, Social Security start age, and amount. You do have a later opportunity to plug in pensions or annuity or other employment income. This is really just starting out, taking a look at just this one data set. Okay. So we've got one more page on this wizard here, and then there'll be some additional data inputs that we'll put in. So we're still in the wizard. Spending assumptions for 2025. So how much are they going to spend? What are their typical expenses? So in this case, they spend $120,000 a year. Ooh, 1.2 million. That'd be a nice budget. So spending assumption, 2025, 120,000. Inflation assumption. Okay, so there are different places in here that we have different areas we can enter inflation. This inflation assumption here is not based on applied to your income or spending assumptions. This isn't saying this is how much our expenses are going to go up each year, how much our income is going to go up each year. There's a different place you can customize that. This applies to the tax brackets. So where will the tax brackets go each year? How much will they inflate? And how much will the standard deduction inflate each year? So this is something that you can play with as well. So they have a default answer here of 2%. We'll just leave it there for now. The final thing that's in here to plug in is if you want to be able to show a tax adjusted ending balance comparison. Okay, so we know that if we have pre-tax IRAs, we've got embedded tax liability. So all of that money is not ours free and clear. We have to still pay tax on it in order to get at it and take that money out. So what we want to plug in is, what do we roughly think the tax rate might be? So if we were to compare the ending balance of $1 million Roth account and $1 million IRA account are not the same. We want to potentially say, well, that $1 million IRA, we still have to pay taxes on that. And so you can plug in a dollar or a percentage here of how much, what's that tax rate on that ending IRA balance. So here, I'm just going to plug in 25%, depending on how high income your clients are, if they have state income taxes, however you want to plug that in, you can. You can go ahead and plug that in. But what I just want to be able to do is to show that $1 million Roth is not the same thing as a $1 million IRA. I want to be able to kind of show what's the tax equivalent ending balance of the two. And then you've got two selections down here. So I want to turn that on. So I want to be able to reduce the actual spendable value of that ending IRA, pre-tax IRA. So I want to add that on where it'll reduce that amount by 25% at the end. And I don't know what tax rates are going to do, guys, okay? But we have the ability here to turn that sunset off or keep it on. So if our current tax brackets will sunset after the end of this year, and we go back to the old ones, or will that continue? So that's completely up to you how you like to plug that in. I'm just going to turn it off for now. So for the sake of this particular experiment, we're going to say, yes, I want you to reduce the value of that ending IRA by the embedded tax liability. So turn that puppy on right here. And then I'm going to turn off this sunset. You can change all of these settings again later on. So I've now completed the wizard. Okay, but I still haven't entered everything yet. I've got more info I need to plug in. So as we start to work on our scenario, you'll be able to kind of see how that's going to look here in our scenario, but we've got some other areas to enter here along the left-hand side. So we're going to go down the left. I'm still skipping over the Roth conversions because, again, I want to add that salt at the end. Here, these are all the assumptions that we just plugged in. So these are done. General assumptions we already plugged in on the wizard. We also plugged in that spending number. So if you wanted to plug in a different inflation number on spending or a different annual amount, or maybe you know that their spending is going to be a lot higher or lower at a later date, So Andy and Aspen, you don't know this about them yet, but they have kids. So maybe they're spending a lot more right now on private education or just costs related to having kids in the house. So you could, if you wanted to, add additional rows where you're saying, hey, in today's dollars, maybe their annual expenses might be a little bit lower at some points or even higher if they'd like to do a lot of traveling later, or in retirement, they might spend more. So you can go ahead and add additional rows. How all of these pages work is that each row just assumes that it's this amount indefinitely plus inflation. So you can see at the bottom, they give you a preview of what that spending looks like. So that spending of 120,000, it'll do the inflation on it, and run that number all the way up through your scenario. You can also toggle back and say, I want to change it by year. So if that's kind of how your brain works, you could say, I want to plug in by year what their spending is. You can add a whole bunch of lines here. For the sake of this experiment, we're just going to say they spend about $120,000 a year and just run it with the standard inflation assumption that's on here. Okay. So spending, that we covered that. We do want to add Medicare assumptions. So I did see some questions in the chat during the EdSlot talk is how do we calculate IRMA? So there's going to be a tool in here. We're going to go in here and take a look at that. So we do want to turn that on. So we want to turn on Medicare and have it calculate those Medicare Part B premiums and then those IRMA surcharges. We want that all to be calculated. So we're going to plug in here Medicare age. So what age are they going to start Medicare? In my case, I've already talked to this client. We know that they want to retire early, 58 and 60 years old. So we know that at age 65 is where they're going to have to turn on Medicare. They're not going to have credible coverage through an employer at that time. Part D, annual premium. You can plug something in here about kind of that premium for the prescription drugs. If you just want to say like middle of the road choice plan through Silver Scripts is like $40, right? So we want to just plug that one in. So I've got client one. This is related to Andy. Then let's give Aspen some Medicare as well. So Medicare, start age 65, because I've got her retiring a little earlier. I'll show you that in a minute. And then premium, we'll just say $40 for now. So you can customize that based on what your client's needs are. Life expectancy, we already filled in. And then now I want to go ahead and enter wages. So I want to plug in what they are earning along the way. This is also where you can enter if they do have pensions or annuities. Our sample case today does not have any, but we're going to go ahead and say we've got employment income though. So we need to get that plugged in here as well. So client one, so this is Andy. So we want to go ahead and enter Andy's wages. So Andy is 40 years old and annual amount of income for Andy, we're going to say he makes $150,000 a year. And that grows by 3% per year. Okay. So, but if you remember, if I don't plug in another row here and end that, that means this guy's working forever. So I need to at least plug in an end date, but I'm actually going to do a little bit of a step down. So we're going to say Andy decides to coast a little bit. He's going to make $100,000 a year starting at age 60. Inflation rate of 3%. So between ages 40 and 60, Andy's making 150. After age 60, he's making 100. That's still not right. He's still not working forever. We need to plug in an end date. So you can always kind of test yourself here, like that's not right. He's got income at 90. So go ahead and add one more row and say, when does that end? So he stops working at 65 and now it's 0. Okay. So everywhere you go, you've got to give an end date, and then let's just test that again. How does that look? Does this make sense? So he's currently making 150. We've got inflation on that. And then it drops down. He's going to maybe cut back hours. And then at 65, he wants to be done. Done, done, done. No more income. But for some of your clients that want to have that encore career or consulting or part-time work, seeing a lot of that lately, being able to model that in is neat as well. Because then you've got some different kind of conversion opportunities in those years that those income levels drop at that time. All right, so he's all set. We've got income for Andy. So going ahead into the scenario here, you can see you've got that green check mark. We've got wages in here. We've got Social Security in here for Andy. So client two, we've got Aspen over here. We still need to give her some income. So we're going to go ahead and add some wages. So they've got kids at home. She is staying home with them right now. So we've got 0 income for now. So go ahead and plug in her current age is 38 years old. Annual income for right now is 0. 0 inflation to that 0 income. But she wants to go back to work. She had a great career before her kids, and now she wants to jump back in. We're going to say age 42. She's going to make $100,000. And we'll give that inflation of percent. But if we don't add another row, she is working forever. So we're not doing that. We're going to say, when does she get to stop? Age 58. So for her example, for Aspen, we're going to have her go to 0 at age 58. Okay. So Aspen's income in this scenario here, we've got 38 years old, 0 income up until 42. So that's when she decides to kind of jump back into the workforce. She's going to make $100,000 a year. We're going to inflate that income for her. And at age 58, she wants to be done again. So we're going to apply and save and see how that income looks for her. Yep, that looks right. I can see that appearing. So nothing for now. We've got some income, and then she is done at that point. Okay. So now everything that we have in here, we have all of the income information here. This is so powerful to show a client how big their income is going to be in these future years. So these are the assumptions about they're going to have some big RMDs later on, and that's going to create a really high income for them later on. So when we're looking at this ordinary income with tax brackets, what we're looking at is these gray bars right here are all of those income years. That's the base case here of what their income is going to be every single year. So we kind of know where they fit into those brackets while they're working and kind of in that early retirement frame. So they might say, hey, Emily, my income's going to be lower when I'm 60. My tax bracket's going to be lower when I'm 65. Maybe if tax brackets don't go up. But what about later? What happens at RMD time? So when we're kind of looking at this scenario here, this is going to be shocking to clients to be able to see this and to say, I want to plan better and be able to bring some of that income down and reduce the total amount of tax you're going to need to pay on that income. And all those questions in the chat earlier about Medicare, we're going to be able to model that too. Okay. So this is how I like to do it. I like to plug in income first so I can just see that landscape of kind of where they are. And then I want to go in and add those Roth conversions later. So if you can scroll with me here on the left bar here, the Roth conversions area is where we want to go. So if you were still down here after you entered in their wage information, you want to scroll up on this control bar here on the left and come back up to here, Roth conversions. So what I want to do is identify the clients, explain that tax planning, that doing Roth conversions makes sense, and show why this is such a big problem, right? Big, big, big problem. Huge income later, huge, huge, huge tax bill later. So what can we do to potentially take care of some of that income in these lower tax brackets here? So that's lots of rule. Number one, always pay taxes at the lowest rates, right? So we want to fill up these brackets. Can I just say really quickly that I am so happy that they chose all of these beautiful rainbow colors, because when you are demoing this with a client, it's not like this green and then the darker green, but the lighter green. It is very, very clear. Yep, your income right now is in this bracket here, up to yellow. Now we're looking at orange. And when you hover over the line, it's going to tell you for that particular year, it's going to pop up and tell you what the predicted thresholds are for those brackets, right? So I want to go ahead and plug in some conversions. We know fundamentally that we need to bring some of this income down into these earlier years. And this is where we can kind of tinker and play a little bit too. So going in and starting to add some Roth conversions, you can kind of plug and play a little bit here, okay? So you can go ahead and plug in Roth conversions. So if you want to go ahead and plug it in for client number one, click on Roth conversions in the sidebar here. We want to start adding some conversions. So for Andy, we're going to go ahead and add it for him. I typically start with Roth conversions first for the older spouse. So they're going to reach that RMD age first. So if we don't get fully converted, that kind of just buys us a little bit more time. So we want to get started. So we're going to say that he's got money in a taxable account. They also have cash flow available to pay some additional taxes. So starting now, let's kind of play with that. So what if we started to do some conversions starting today at age 40, and let's say we do $60,000 a year. Maybe we came up with a tax budget. I identified kind of where they are in the brackets and saw that that's kind of how much room we had left in that bracket. And then we want to go ahead and just plug in inflation. So we're going to, this is inflation on how much more might we convert each year, okay? So, but we don't want to necessarily convert forever. Let's just kind of see, I'm curious, how does this look if we just kind of convert during his working years when they've got the cash flow to pay those extra taxes? So let's go ahead and plug that in and say, okay, we're stopping that at 62. We're going to apply and save and just test it out and see how that looks. So, yep, we're going to do some conversions. It's starting to emerge here. The picture of how much we're going to convert each year. So that's going to plug in. We're going to see these conversions every single year, and that's going to end. So I just want to see what that looks like, right? So we're going to kind of plug and play a little bit. Okay. So that will automatically update our case here, but something else popped in here. Now we can see what their income looks like every single year in the Roth conversion case. So in the Roth conversion case, now we have kind of a darker colored bar here, and you can already see we brought down that big income at the end. So our base case here had this really high income at the end. We already brought that down. So at least kind of brought it down into a lower bracket here at the end. The other thing that we could then look at is what are the total projected taxes? So in the base plan, so if they just never met with an advisor and never did any tax planning and never did any Roth conversions, they just kind of believed that continuing to save pre-tax makes sense. They're going to pay $18.6 million in tax, 18.7. In the case where we do the Roth projections just up until age 62, that tax bill has already been lightened significantly. So I regularly see 7-figure drops in total lifetime tax, especially for these younger people that were doing these conversions. Okay, so you can see in this base case here, so you can see how much tax you'll pay in each year. So this is a quick way to also see what's the cost to doing this. So we know that for now, during the Roth conversion case, we're going to pay $30,000 in taxes. We would have been paying $18,000 in taxes. But the magic kicks in here, right? So we're doing this now to save a lot of taxes later. So as we start to see, this becomes even more powerful year by year. These are individual year taxes, right? So age 94, instead of paying 1.3 million in taxes, now we're paying 704. So that's a big lift. We're not done yet. We're still going to do more. There's also this huge IRMA surcharge area too. So this is another thing we can help save clients real money on what their future Medicare costs are going to be. So by doing some conversions early on, we're reducing their healthcare costs or healthcare premiums, Medicare premiums by $85,000. Still a lot to go though. We got to chip away at this a little bit better. And then what is the portfolio value? So this is where I plugged in. They're going to do a tax adjusted ending portfolio balance. So what is kind of the equivalent after you've taken the money out of the IRA? What is the equivalent portfolio value at different points along the plan? Okay. And then it'll just say just what the portfolio difference is. So how much more are you going to have in your accounts to be able to spend and utilize based on doing these Roth conversions? Okay. And then one more thing in here is portfolio value by asset type. This is super cool. You can see, well, how much of their portfolio value is sitting in Roth accounts or other tax deferred accounts or taxable assets. So how much are they going to have in each of these cases? So I want to add more conversions. This was cool. We saved them a ton of money in taxes. We already saved them some Medicare premiums, but they can do more, right? Especially here, we're wasting all of this tax bracket room right here. There's plenty of room in this kind of retirement time frame here to add more conversions. So we want to go ahead and do that. And I want to add one in for Aspen. I want to kind of play with that and do something for her in here. So we're going to go in here on the left-hand side, go to your client to Roth conversions, click on Roth conversions right here, and we're going to go ahead and add a round of Roth conversions for her at her retirement. So Aspen, she gets retired 58 years old, and let's do some Roth conversions for her about $80,000 a year. And we'll go ahead and do that 3% inflation. And we're going to stop those age 72. Okay, so we're going to just do some conversions for her along the way. And again, we're just kind of testing it out, seasoning it, seeing how it looks, seeing how much we're going to see in that reduction of those future taxes. And those are ultimately, those taxes are in their lifetime, but also think about the beneficiaries. So if they die earlier than that point, that age 95, there are some big taxable assets that are going to be, big tax deferred assets that are going to be passed on in those other scenarios. Okay, so we're going to do some Roth conversions for her. So I added in age 58, starting at $80,000, 3% inflation here. So now we're going to go in here and voila. So remember, this darker blue bar here is the case where we have the Roth conversions. So we've really brought down that future income. So kind of graphically, you can see that. You can also see that there might be a case here. We definitely wanted to fill up this 24% bracket here, but at different points kind of spike above that, and that's fine. But look how much we saved in taxes. Oh my gosh, right? So projected taxes, you can see here, and this is nominal value. So this is in future dollars. So base projection, so this is how much they were going to be paying in taxes, that 18.7 million. This is total lifetime taxes in the Roth projection. So taxes on employment income, taxes on IRA withdrawals, taxes on the Roth conversions, taxes on Social Security income, potentially, if they have income at that time. So the projection difference is saving 11.8 million. If you think this is too crazy, my client's not going to believe these numbers because they seem so crazy, you can go back up here in your control panel and say, well, let's just maybe show in today's dollars, okay? So you can then adjust that down here. It's still big, but it maybe doesn't feel as like unrealistic sometimes to some of our younger clients. So it might say, okay, your lifetime total taxes in today's dollars is about $8 million. And in this new scenario, we're going to save more than half of that, right? So your projection difference, you're going to save $4.2 million in today's dollars on taxes. I mean, the charts speak for themselves. So being able to show what the tax rates look like in the future and why we're worried about it, and how much we can reduce IRMA. So you can even kind of continue to fine tune that and say, okay, they maybe gave you a budget and said, I'll do $60,000 of Roth conversions a year. That's kind of what I can handle cash flow wise. But once you start to see that and say, hey, do you maybe want to knock some of this out? Or maybe want to reduce some of these later taxes even a little bit further? Is there a way to potentially do that? So you can continue to kind of work with it and tweak it and play with that a little bit as well. And then just be able to see in the base case, they were going to end up, let's say they live to be 95 years old. This is his age 95. They were going to end up with 11.3 million in tax deferred assets in today's dollars. And in the Roth case, this dark blue line is all Roth money. So they're going to have, in this case, a lot of money sitting in Roth accounts, fully tax-free. That means they're not going to be sitting there in retirement saying, should we, buy a vacation home, or should we take another vacation, or should we spend a little bit more money? Because they're not going to then have that thought of like, oh, but I'll pay more taxes if I have to do that. So clients are going to be very happy to sit in retirement with a big old bucket of Roth money. So this is the case. I'm going to send out after the end of this, or they will, my slide deck, which has the exact inputs that we plugged in for this particular case. But even better, do this for yourself. Use your own numbers. I bet you'll go into a Roth conversion for yourself at the end of this. Plug in a few of your clients. Do it with them. So walk through it and say, this is new to me. I want to go in here with you and show you. When we zoom out and really look at that big picture and take a look at that plan in the long run, this is what I'm worried about. So I'm not thinking about so much what your tax rate might be here, or even kind of in that early retirement timeframe. I really want to reduce this big number for you. And especially if it's important for them to leave Roth money to their beneficiaries, if they have that desire to leave tax-free money, which many of our clients do, being able to kind of show them that difference in what they're going to inherit is significantly meaningful to that next generation. So being able to inherit all this Roth money is a beautiful thing, okay? So I think we're right on time for Q&A. I want to make sure that I hit some of these questions that people have. So I'll go down here. Does this assume any additional contributions? Actually, there's some great questions. I bet you I can kind of consolidate some of these questions into showing the data output that comes out of here. So some of you may have caught or noticed here that there's an export button for a big dump of the Excel spreadsheet, because you can't see everything here. So you can't see exactly what's happening with all the behind the scene calculations. So I'll pull over a spreadsheet and show you what that looks like. And I also had a question in the chat here too about if you can download this report, and you absolutely can. So you can go ahead and print to PDF. You can print this report and it comes out, looks great. So this is what that finished report looks like. So add your logo on there. You can go ahead and then save this and walk through it with your client. So maybe if they get maybe overwhelmed or confused by tinkering and playing with the tool together with you, you can just show them the report. But I will tell you, I think it's meaningful. I prefer to bring clients into the tool to be able to show them, here's what I'm plugging in, here's what I'm thinking. Do you have any different feelings about these inputs? So now that we're here and now that we're seeing this, do you want to kind of like tinker with this a little bit too? Like, here's a spoon, try the dish. Do we need to add more salt? So this is something I like to do with them. I do the same thing with the scenario analysis. I like to go into scenario analysis and say, hey, this is the assumption I made of like carrying over some of your data from the previous year to be able to show you kind of a current year projection. Let's do this together. So you can go ahead in presentation mode. You can go ahead and print to PDF. And if you wanted to go ahead and see kind of what some of those ingredients are that maybe you didn't see before, you can export an Excel file. I'm going to share with you and show you what that looks like here. Okay, stop share, new share, jump you into Excel. Okay, so you're not meant to digest all of this at once, but they have this really helpful red triangles up here that if you kind of go and kind of hover over them, it'll give you just a little bit more information of like, what is this number exactly? So this is the total of how much they have in, like, client one has in his IRA at the end of the year. So they're just kind of saying, yep, that's what this is. So you can kind of go through the whole spreadsheet and see all this data that goes in here. So what are they assuming for portfolio distribution? So in order to pay the tax bill, they're taking money out of taxable accounts. So what's the impact to that? What's the cost basis at the end of that time period on that taxable account, right? Because we started out with, we plugged in a $100,000 account with $75,000 in basis. So how does that project forward? What are they assuming there? So going ahead and plugging in final AGI. So they've already kind of done a little mini tax return for this client. And then for IRMA calculations, the 2 years prior MAGI for Medicare purposes, they're going to show you what that looks like kind of looking back. So they're going to be able to show you all of that kind of detail. So what I would suggest to you is spending a little bit of time kind of digging through the spreadsheet and being able to see what types of assumptions change here. So they also have here, like, this is a question that I've received before is, you know, do they change the filing status in the brackets when one of the spouses dies? And yes, they do. So you can also kind of plug in that scenario too, but it automatically does that when you have life expectancy ending for that one. Okay. So I've got a few more questions in here. So some of them are, is that right? Over $18 million in lifetime taxes? Yes. That's a crazy number, right? But that is ultimately, if you kind of go into the spreadsheet and take a look at it, if you wanted to change things like the portfolio return considerations, those are some things that you can go ahead and change in there. So is there a way to zoom in on the rainbow chart? No, unfortunately right now, I think if you kind of make it a little bit bigger, you can slightly, but to be able to kind of see where you fall, the best thing is typically to kind of hover over that bar and see what their income looks like, and it'll tell you how much, kind of how much room is left in the bracket. So you can go in there and say, okay, based on the income that they have plugged in, let's say it's 100,000, the next bracket's 120, you've got $20,000 left in that bracket. So you can't zoom in and kind of see exactly visually where they fall with that bracket, but you can go ahead and hover and calculate a dollar amount there. So if you really wanted to fine tune this for somebody, you could go ahead and kind of year by year, you could do a different Roth conversion amount based on kind of where they are with that bracket, or you can kind of just come up with directionally what makes sense. So I see this as a directional tool where I'm saying, do Roth conversions make sense for you? Probably, right? And how much overall general type of impact can we have? A huge amount, right? So shit ton of impact. But once we want to kind of get into that current year and say, okay, now Andy and Aspen, we're sitting down and taking a look at how much you might look to convert this year. I actually like to go into the scenario analysis tool. So if you're not familiar with scenario analysis, I would potentially maybe go look at a webinar or play around with that scenario analysis. And I like to actually go in and plug in the exact cost and what makes sense to do for Roth conversion in that specific year. So plugging that in and being able to see that more close direct impact, I like to do that inside of the scenario analysis. Roth conversion tool is to be able to tell the story. So this is my storytelling tool for the client to be able to show them what this massive impact is going to be of doing Roth conversions. And then in the current year, I want to take a look at their scenario analysis and do that type of projection, or have the CPA or EA that they work with do a projection and say, how much room do we have left in this bracket? Or if I'm willing to pay another $6,000 in taxes this year, what does that potentially look like for a conversion, right? So how much can I convert in order to kind of cover that tax budget that I might potentially have? So that's something that once I get in there, it's kind of like, I live in Charlotte, North Carolina. If I wanted to drive to Los Angeles, for example, I know that I can probably just plug in LA into my phone and kind of start driving there. But once I get a little bit closer, I want to plug in my exact destination, right? So as I kind of make my approach, I want to fine tune that. So what I'll tell clients is a lot of variables are going to change in your plan overall, and we're going to look at this year by year to dial in that amount. And we're doing a lot of Roth conversions right now with a down market. And what I'm doing for clients that maybe have some unpredictable income is doing like a good chunk of the conversion amount and maybe topping up the conversion later. So we might be doing like $100,000 conversion now. And then at the end of the year, we might do another 7,000, 14,000, 25,000, depending on where they are in the bracket, especially if they're over the age of 65 and they're more Medicare IRMA surcharge sensitive. And we really want to kind of stay below a number, stay below that cliff and not kind of trip over that tripwire. That's something that we're potentially then doing it twice. So we're going to look at what do we generally want to do this year? Let's do a big chunk of it now. And then we even just pick specific positions. So let's look at your IRA and look at your more aggressive positions and get those converted. So some of my clients might say, yep, I'm willing to convert this one position. What would be the tax cost of doing that? So that's kind of another approach or way of looking at it. If they don't really know what the tax budget is, you could basically look at, here's one of your more aggressive positions that you could maybe convert. Here would be the range of cost on that to potentially do that conversion. And then be able to maybe talk through it in maybe a more bite-sized kind of piece, okay? So get in there and play with it. I hope you had fun playing along with me today. I think it's really interesting and a great way to kind of show that to clients. And it's kind of, once you get in there and play with it, you can kind of play with some of the assumptions, get into that Excel spreadsheet, take a look at maybe some of the data points that are meaningful, maybe go back in and tweak it a little bit and say, what if, what if, what if, what if? You can have a couple of different versions of this, but we don't know what the future brings. This just lets us show them what the possible impact could potentially be. Okay. So thank you so much for joining today and following along with me.
Emily, amazing as always. We had some great comments in the chat. We had almost over 170 questions. Probably 200 were answered. Additional ones were answered. So super powerful presentation. We got a comment from Juliet that said, "This is the best!" All caps! Exclamation! 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 And a comment from Jeffrey that this was an awesome applied presentation, Emily. So show Emily some love in the Q&A. I know she loves to see it, and really it just keeps that fire in our bellies, and I know in Emily's belly, to just keep going and really deliver the maximum amount of value that we can.
Thank you. And who said the tax planners are nerds? I mean, all the fun and excitement and energy, but this is so exciting. This is more exciting than any other profession. So thanks for doing this. This was fantastic.
Thank you, Emily.